Well, my dear friends, today it is an historical day that we have been waiting for a very long time. My strong buy rating in Goldman Sachs with a very specific price target, $185 to $189 since 2013. In fact, last year you all remember that this company missed earnings, and it appeared to you that it was strange that I reiterated the strong buy rating in Goldman Sachs, but I was very clear to inform you that my vision, and I compared it to Amazon, in fact, in the tech sector, that Goldman Sachs was not going to sell off. Any sell-off in Goldman Sachs, it would correspond to a buying opportunity. And in 2014, when the stock sold off all the way down to $152, that corresponded to my downside for the year 2014, you saw that price or the vicinity of it as a wonderful buying opportunity, as it was already in fact in 2013 when I announced the bottom at $38. So in the end, to explain all this, since my first upgrade a few years ago in Goldman Sachs, precisely at $77 in 2009, and that didn't correspond to the bottom, because this stock, as you'll remember, sold off all the way down. I think it was 52 or 56, that was in fact the bottom in Goldman Sachs, or $48 in fact. But as I explained in 2009, the more it sold, the better it was, because this was a unique buying opportunity, as well as it was Wells Fargo at $10, as well as it was many financial stocks at that time, including Morgan Stanley, other strong buy opportunity that we identified, and we maintained that rating for a very long time, for several years. And so today it is very pleasant to be watching this tape trading almost at $185, a new 52-week high in 2014, and I'm pretty sure that you are conscious of the process that it took all these years to invest and to inform you, predicting all the major moves in Goldman Sachs. But also, if I had to refer to before 2009, we also have to mention the vast profits made on the short side in Goldman Sachs. So in the end, it has been perfect since the very beginning in Goldman Sachs, and my input that you had in Goldman Sachs, in Citigroup, in Morgan Stanley, in JP Morgan too, and in several other financial stocks, Visa, MasterCard, and so on, a long-term opportunity to make very vast profits by remaining invested in these stocks instead of trading them. So the key here, it was never, as I discussed in other opportunities, never to trade the stock, but to remain invested, and to disregard completely, as I announced in the blog of the company for more than 3 years, to disregard completely all the downgrades, all the recommendations to sell short financial stocks, when you'll remember that individuals like Gene Rogers and Mark Faber, for years they have been saying that financial stocks, they were terrific selling short opportunities, and I was saying precisely the opposite. So passed several years, my friends, you see that financial stocks became some of the best investments in the stock market, and you had to be present. And I repeat, it was not a matter of trading, it was a matter of investing in the single best companies that they were going to overcome those problems that they got involved in, and they were going to learn. And besides, obviously, for all factors that also I cannot disclose here for obvious reasons. Thank you.